Profits be upon you. Welcome to another weekly market forecast. Today we're going to go over the gold and silver. Gold and silver. All right. Be careful this week. It's CPI week, and that'll come on Wednesday. So you want to watch out for the markets because sometimes they'll consolidate a little bit before the days before a big market mover news announcement like CPI data. All right, and the the trading could be a little crazy, with impulses and whatnot popping out of nowhere. So watch out for your stop losses, right? All right, now we'll take a look at gold. Looking at the monthly, you can see that we pushed up higher, pulled back, ranged, stayed within this range, right, for a good while. And then we had a nice impulsive move to the upside, breaking market structure to the upside, right? Where are we going? We're at all-time highs right now. Where are we going? Well, one way to kind of measure how far we can go with this kind of move is we go from the swing low to the previous swing high to the the, the latest swing low, right? The most recent swing low. And we just move over to the side so we can see what the measured move is. What we're measuring is this impulsive move, and from here to here is the next impulsive move. They should match, all right? 80% to 100%. And where are we? We've already reached the 80% of this measured move, right? And we're on our way. Look at that bullish candle, February's bullish candle start, all right? We're already moving towards that 100% measured move level, which is at 3,065. There are a lot of people that are talking about gold reaching 3,000. All right. I happen to be one of them. And I think we're on our way to that because we reached 80% and we're still moving higher, still breaking fractal structure to the upside. That's where I get that from. Now, but that's just something to kind of bear in mind. Let you know, what the overall macro perspective could be. All right. Now, if we go to the weekly, you can see that. Let me move this. We've been in 6 weeks of bullish movement, and just lovely, right? Lots of uncertainty in the markets. All right. Geopolitical situations are creating an atmosphere, an environment that is uncertain, and people will start to pull in money from equity markets and put them into safe havens like gold, right? Because there's uncertainty, wars, rumors of wars, tariff wars, and just Trump overall and his crazy self. So he's doing his thing and shaking up the government, and it's creating an atmosphere of uncertainty, right? What we will notice is the structure, though. The structure. We have broken that all-time high over here to the upside, and February is looking very strong. And each time, if we look on the daily, what we can see is that the markets, what do you call them? They respected discount arrays. Discount arrays being fair value gaps. Price uh, pushed down, sold before the buy up, creating an order block here with an imbalance, or otherwise known as a fair value gap. Price comes back, taps it, and uses it to go higher. All right, we do it again. We have a sell before the buy up. Price creates this order block here with a fair value gap. Price comes back into that fair value gap, taps into that order block, and continues higher. That's just been repeated. So, what do we even think? Well, let's bear something in mind. Let's go back to the weekly real quick. Each candle closed higher than the previous candle. All right, and that indicates the bullishness. All right, the bullishness of the market, and that we can at least know that the next week will likely hit that high from the previous week, hit the high from the previous week, you can see that has happened in succession, right? And so far, this is where we are next week. And what do you think my target is? All right, in a bullish market where the discount arrays are being respected, I'm looking for this to be the target. Very naturally. All right, and until the market says otherwise. When we start to see bearish breaks of market structure to the downside, hey, that's when you start to switch your bias. My bias right now is bullish. Period. All right. This is my line for the open of the next candle. All right. Where could price go to? Well, if we move this, all right, you can see that price reached down and pushed higher after this after the sell to the buy. This is for me a valid area for price to pull back into. All right. Yeah. And you can see how close it came to doing just that. And I'm thinking that this is going to be an area that price may want to pull back into, take this low, all right, and give us a bullish break to the upside. Now, watch. There's swing structure and there is fractal structure, all right. The, this the big swings in the market is a swing structure. All right, fractal structures the individual candles, all right, the individual candlesticks. All right, when you see one breaking the high of the other one, or when one just snatches liquidity below the low of the last one, that we're talking about swing structure and fractal structure. And what you want is when they are both aligned for your trade. If you want to take buys, like in this market, the bias is bullish, and you want to take buys in a bullish with a bullish bias, and you want to wait until you see bullish swing structure, which we have. The bullish swing structure is, you just ask yourself, when was the last uh, uh, market structure break, and what kind was it? Was it a bullish one or a bearish one? We've broken bullish swing structure. All right, that means the swing structure is bullish. All right, now, is the fractal structure bullish? No. All right, if we go to the 4 hour, sorry, why did I have problems with that F? Anyway, uh, what we see is price swung up here, taking the high, right? We took that high and smashed down. Okay, now what you want to see is in fractal structure is higher highs, higher lows, right? You want to you want to see these highs being taken, and you want the lows to be protected. All right, you don't want to see the price take those lows. All right, what happens is when you do see price dip back down below a low like this one, now your fractal structure is bearish. All right, you want to wait until the market turns around. Haha, there is a fractal structure break to the upside. This is a market structure shift. All right. And you look for price to pull back into demand so that you can take a higher probability trade to the upside, which matches your bias, which matches your swing structure. I hope that made sense to you. Rewatch this and leave a question in the comment section, and I will answer it for you. So what am I looking for here? I'm looking for price to pull back, because it's obviously it's pulling back here, right? And I think that there's a chance that price will probably turn around in order to make a bullish uh, structure break here. All right. When I see price take this high, let me back up real quick. When I see price take this high, all right, you say, okay, we are bullish, right? We are bullish. We didn't trade through. We just snatched the liquidity with this wick. That's what it means, right? And you see price pulling back. You wait to see for price to pull back into a discount array. A discount array is this order block here. All right, the sell before the buy. My mouse is acting weird. I don't know why. All right, the sell before the buy, and you look for price to come back into this uh, that discount array so that it could continue to go higher. All right. Uh, if I see price sweeping liquidity or mitigating an order block, I'm waiting for that fractal shift to the upside and the pullback so I can take that high probability trade. So that's what I'm looking for in gold. If I go to silver, silver's not too different. If we go to the weekly, how did last week end? A big doji. However, did it take that high? Yes, it did. Why? Because this of the previous week, you saw that price closed well above the high of the trading range of this of the previous week's candle. That indicates bullishness, like I just said earlier. All right. This last week, yes, we took out that high. All right. That's the very least of what you expect when price closes above the previous week, when it closes above the high of the week preceding it. So you're looking for bullishness to continue, but price closed well within the trading range. That indicates that either price is going to consolidate. All right, it's the start of consolidation or a possible pullback. So we're going to watch how the next candle opens and how it proceeds. But right now, this low becomes vulnerable, in my opinion. This low becomes vulnerable, but we are at an area. If we go to the daily, we are at an area where we find uh, uh, a bullish fair value gap, right? And we have uh, uh, an area here, this low on was this Monday's low was crazy because it was a gap up, and then it I mean on the the U.S. dollar index and the indices, you can see how price had gapped up on the open, and then we start to see it pull back. Now, what I'm looking for next week is 50% of these long wicks. Usually, price has some kind of reaction at those areas, and there's potential for price to turn around and find support at that area before it gets down to this fair value gap. If it does get past that area and takes this low into a fair value gap, this will be a very high probability trade to the upside, in my opinion. All right, I am still bullish in this market. All right, if you pull back, and widen your view, you can see that the market swing structure is bullish. All right, higher highs and higher lows, and we just hit the other side of this channel. All right, for price to find support for higher prices, right? So things are looking up in this market, and should we make it past that big long wick here and take that low into this bullish fair value gap, I'm pretty sure we're going to find uh, the kind of support we need to take a high probability trade to the upside. But I'm going to watch how price reacts to that 50% mark there first. If we go down to the weekly, let's look inside of this wick to see if there is an area inside that wick where price could find support. All right, here is where price is right now, and this will be my target. This low hanging fruit here, folks. So this isn't a big stretch, but this will be the first target next week. All right, and but what we find is this wick here, this wick low, and the extreme of this demand zone. All right, this is a sell before the buy. All right, a sell before the sharp buy up. This is actually demand. This is actually demand, and we haven't even reached the middle point, the consummate encroachment or the 50% of this demand zone yet. So there is quite a lot of potential for price if we refine this bullish area of demand. If we refine it here below the low, below this low here, we can get this. All right, we get this, and let me see if I can make this proper here. All right. Yeah. No, that's wrong. I'm sorry. All right. Let's. Yeah. So if we can find price finds the support it needs here, and trust me, we are once we break that low, we have a market structure shift to the downside. It's not matching the overall bias or the swing structure, which is bullish. So I'm not interested in taking sells in this market. I'm waiting for proper buys, and proper buys are when the swing structure and the fractal structure are in alignment, and that's when you take your best trades. All right, and I'm waiting for price to turn around, break down into the extreme of this order block here, this bullish order block, like so. All right, break that high. That will be a market structure shift to the upside. I'm waiting for price to pull back into this bullish leg, find the demand, and continue higher from there. All right, and sweep these highs into this buy side liquidity. Okay, I hope you learned something. If you have questions, please put them in the comment section. And if you'd like me to give you these more bite-sized market forecasts, which take a little more time and give it a little bit more detail, so I can help you learn how to read these markets. If you prefer that, hey, let me know in the markets. Let me know in the comment section. I will. It's my pleasure to show you what I know. That's it. You know what I mean? There's plenty of people who teach way better than me, to teach ICT concepts way better than me. All right. I have my own approach. I have my own way of seeing ICT concepts. All right. And, and they work for me. And I'm hoping that they may work for you. You should be sure to hit the like button, and I will see you in the next market structure. Uh, what do you call it? Actually, no, wait a minute. I'm going to see you in the next market forecast with at the S&P, the Nasdaq, and the Dow. All right. Yeah, that's it. Thank you again for watching.